Hey financial warriors, welcome to the show. And US inflation has hit a 40-year high, which is crazy because last month it hit a 40-year high too. So it hit a 40-year high again, highest level since 1982. And in this video, we are going to go through all of the inflation data released this morning by the Bureau of Labor Statistics. But first of all, if you're into investing and making money, which you obviously are because you're watching this video, you can right now get five free stocks by opening up a new account with the brokerage app Webull. All you have to do, download the app, open a new account, deposit any amount of money, and you will get 5 free stocks. The total minimum value for all of those stocks is $27, but each one can be valued up to $3,000 depending how lucky you get. Webull, of course, it's a commission-free brokerage app. You can buy stocks, ETFs, and cryptos on their platform. Link is below if you're interested. Now, the inflation figure released this morning by the Bureau of Labor Statistics was 8.5%, meaning in the simplest terms that the dollar has lost 8.5% of its purchasing power from March last year to March this year in that 1 year period. You could also say that $100 right now will only buy the same amount of stuff that $91.50 would have bought last March. So if you have money just sitting there in a bank account earning 0.5% interest, which is considered good at this time, you're actually losing money in real terms. That's why you need a brokerage account to invest in stocks and cryptos for higher returns and get 5 free stocks with Webull, link down below. Now, when we look at the complete set of figures released by the Bureau of Labor Statistics, we can see that there is even more to this story because many sectors of the economy have actually inflated by double digits, notably food and energy. So we have food at home, 10% inflation, energy commodities, 48.3% inflation, gasoline, 48%, fuel oil, which is what a lot of people heat their homes with, at 70% inflation from this time last year. One slight bright side of the report is that it saw the price of used cars come down slightly over the past 2 months, but it still remains at 35% year over year. Crazy thing is, the NASDAQ and the Dow Jones both rallied at the start of trading today. With the NASDAQ, it opened higher and has been stable, a little bit harder to see the increase there, but the Dow shot straight up out of the gate. With the worst inflation in 40 years, you would think that it would crash the market, but the consensus amongst analysts this morning seemed to be that the White House had actually got ahead of the story with some comments yesterday stating that there would be elevated inflation when the report comes out today. Have a listen to these comments by White House Press Secretary Jen Psaki. It's audio only from the reporter's gaggle aboard Air Force One.
There is additional data that is coming out tomorrow, and we certainly anticipate forecasters generally expect elevated inflation tomorrow, especially for the year-over-year measure, which includes high inflation from nearly a year ago when the economy was reopening. This in part reflects the fact that we continue to see consumer price increases for used cars.
However, when the report came out today, it sat pretty much at the predicted level, okay? Economists had predicted 8.4% inflation year over year for the month of March, and we ended up at 8.5, just 0.1% higher. So actually a far worse figure, probably like 8.8 or even 9%, had been priced into the market because of Psaki's comments yesterday. You can see here on the Dow chart, April 11th, we have this drop where those comments were made, and then on the release of the figure, investors breathed a sigh of relief and bought back in, raising the market. So lastly, what is the reason for all this inflation? Well, if you ask me, there are several reasons. You've got the remaining COVID restrictions, you've got all the money we printed over the past couple of years, trillions of dollars just created out of thin air and put into the economy. Then you've got government policies, which have had a big effect on energy prices, oil, etc., shutting down the Keystone Pipeline. Then you've got supply chain issues, new lockdowns happening in China, and then you've got the obvious war in Ukraine, which has happened over the past month or so. Now, the White House released a statement about the consumer price index on March 10th, so just before these figures came out, where they're kind of trying to reassure people not to worry about inflation, but then at the same time sort of saying, yeah, inflation is going to be bad. So anyway, let's take a look at it and go through some of the key points. Biden starts off talking about how the jobs market is strong. Our jobs recovery remains strong. New unemployment claims remain low as jobs are created at a record level. Now, this is a little bit misleading since we're still in the tail end of the opening up phase after COVID restrictions are being lifted, with almost all restrictions lifted now, so people are going back to work, finding jobs rather than leaving jobs at the moment. Then in addition to that, if the US really is heading towards a recession, the jobs market is normally the last thing to be affected because companies tend to want to hold on to their employees if they feel a recession coming, rather than first letting people go and then having to spend money to hire people during a recession. So the unemployment rate, although it is an indicator that a recession is happening, it is a late indicator. It can't be used really to predict that a recession is about to happen. For example, in April 2008, the US unemployment rate was 5%, only 0.3% higher than the 4.7% rate 6 months earlier. However, many banks had already started having massive problems even in 2007. The unemployment rate at the end of 2009, however, at the tail end of that recession was 10%. So it is a trailing indicator of a recession. Biden then goes on to talk directly about inflation. At the same time, today's inflation report is a reminder that Americans' budgets are being stretched by price increases and families are starting to feel the impacts of Putin's price hike. A large contributor to inflation this month was an increase in gas and energy prices as markets reacted to Putin's aggressive actions. So blaming Putin for our problems, but yeah, it is true. We'll give Biden that one. If we look at the statistics released from the Bureau of Labor Statistics, we can see that energy commodities, gasoline, and fuel oil all rose in double digits in March, which coincides with the Ukraine war. In the space of about a week, gas rose here in New York State from about $3.50 to around $4.25. So I was out on my vacation in Las Vegas laughing at them for having $4 gas in Nevada, and when I came back I was like, oh, gas is $4 here too. Literally, in the space of a week, gas rose like 75 cents. But we do need to remember that gas has been rising steadily since the current administration came into power, but then the Ukraine war gave it that recent spike. Moving on. I know that higher prices impact a family's budget, which is why I'm fighting to bring down the everyday prices that are squeezing Americans. Last week, in coordination with our allies, the US secured a release of 60 million barrels from our strategic reserves. My administration is pushing for investments so we can manufacture more in America, strengthen our supply chains, and move goods to market at lower cost. So releasing oil from the strategic reserves is a good start. It'll bring down prices in the short term, but it's only a temporary solution and the reserve will have to be filled up again anyway. So in my opinion, easing up on climate regulations, approving things such as the Keystone XL pipeline would be a much better move. And who knows, maybe Biden will end up approving the Keystone XL pipeline. I know he doesn't want to because it was kind of one of his signature policies at the beginning to shut it down. But you know, the situation has changed. There's a possibility he might end up approving it. You know, Obama said he was going to shut down Guantanamo Bay. It never happened, just wasn't realistic. So, you know, this could be something like that. And the part he says about pushing for investments to manufacture more in America is interesting too, since it was only about 3 weeks ago that the BlackRock CEO Larry Fink stated in a letter to shareholders that the Ukraine war would end globalization. And you already see the Biden administration reacting by talking about bringing manufacturing back to America. And Biden goes on to end the letter by taking a little stab at Trump. I guess he couldn't resist. And then he talks about how he's lowered the budget deficit, which isn't really that significant since the last 2 years we spent trillions on stimulus, so naturally the budget deficit will get lowered. It's not really anything to celebrate. Now, the thing that worries people the most is what the Fed is going to do to combat this inflation. Well, we all know already that there are a load of interest rate hikes coming this year. But as those interest rate hikes happen, it could put a massive damper on the stock market and also cause a recession. Just remember, if the stock market goes down, it's going to be buying season, stocks are on sale, and you may be able to pick up some bargains at great prices. And you're going to need a brokerage account to do that. So why not get 5 free stocks for opening up a new Webull account and investing any amount? Link below. Please subscribe if you're new, and we'll see you next time. Bye-bye.